Hello everyone, I'm Nikhil Khaneja, a chartered accountant by profession with over 12 years of experience in accounting and finance. For the past 10 years, I've been working as a corporate trainer delivering specialized training across various domains of finance. I've also worked as a consultant with leading firms such as EY and PwC. My training portfolio covers a wide range of topics, including investment banking, financial modeling, valuation, and several other finance related disciplines.
Guys, as we know that everyone is aware enough nowadays that they want to invest their money so that they can just keep themselves abreast with the environment. No one want to see that their money value should decline by the time. If I am carrying 100 rupees in my pocket, I want to make sure that my money value should remain intact. But by the time inflation is there, so definitely the goods that I am able to buy from my 100 rupees today won't be able to buy the same quantity after 1 year, because the concept of time value of money prevails here. But this is really important, how I can make sure that my money value should stay intact. So in order to make my money value intact, I need to invest my money at least at a rate which makes it parallel with the inflation rate. For example, the rate of inflation is 8% or 7%. Then I need to make sure that my money, the money which I am carrying in my pocket, it also should grow at a rate of 8%. So that after 1 year also, I would be able to buy same goods or same services with my money. So money is never kept idle. Everyone is aware of money is never kept idle. If you are just carrying your money in your pocket, it is not going to grow. In order to grow, you need to make sure that you are investing your money. You are investing your money. No one wants to keep their money idle. In case you just have 1 lakh rupees with you and you just keep that money in your locker or in your almirah, do you think that money will grow by the time? Obviously not. But yeah, it is completely inevitable, it is completely indispensable that after 1 year, the 1 lakh rupees won't be carrying the same value. So what you can do? The only option that you have is to invest that money. Now, when it comes to investment, guys, you must be having multiple options. You can invest your money in stock market, you can invest your money in mutual fund, you can invest your money in debenture, bond instruments, you can invest your money in gold, you can invest your money in real estate, depending upon the amount you are having. Again, some sources of investment require minimum capital you need to have. Like with 1 lakh rupees, you cannot make investment in real estate generally. So guys, one thing is clear, if you want to grow with the time and if you want to match the inflation rate, if you want to compete with the inflation, we need to invest your money. And guys, just need to tell you that investing your money is not an easy task. It is really a complex decision. When you make decision about investing your money, is that easy decision? No. You must be having multiple options on your table. Now you need to decide where you want to invest your money. Why we invest your money? Guys, you need to have one clarity. Why we want to invest our money? When we invest our money, we have one expectation that we want to earn some return. We want to earn some return. कोई भी, any invest. For example, if I am making investment in the market, then I have certain expectation in terms of return. It could be any percentage. I want to keep my money value intact, and for that reason, I need to invest my money. I am doing investment, and at the same time, when I am doing investment, I'll be expecting some return. For example, if I say inflation rate is 7%, that I need to make sure that investment that I am making, it should fetch me at least 7% or more. Guys, this is very simple concept, not rocket science. That I know there is inflation in an economy. There is an inflation in an economy. And if I am carrying 100 rupees in my pocket, it won't be having same value after 1 year. So I need to keep my money value intact. For that reason, I'll be investing my money. And I should earn at least the rate on that investment, which should be at least equal to the inflation rate in the market, so that my money will grow at the same rate at which economy is growing. Now, one other thing. As I told you, investment is not an easy decision. When you are making investment, it is not an easy decision. You will be having multiple options. Let's stock market. You can invest in gold. You can take the help of any mutual fund. You can invest in real estate. You can completely invest in debt, where you will be earning fixed rate of interest. As you are having multiple options. Now, for example, the person is Mr. X. He wants to keep his money value intact. There are multiple options available. Where he should invest? Where he should invest? Now, thing is, when we make decision about investment, there is one factor that we need to consider, which is risk. If you keep your money in a bank, guys, just focus on the screen. If you keep your money in a bank, either you do the simple deposit, which is called savings. You are just keeping your funds idle in a bank. You can earn, if I say the example of bank, if you do normal savings, you could earn 4%. If you do FD with a bank, it will fetch you approx 6 to 7% return. Guys, when you are making your investment with a bank, if you are just keeping general savings, you will be earning 4% interest on that. If you are making FDs with a bank, it will give you 6 to 7% return. Guys, you know, with bank, your investment is risk-free. With bank, your investment is risk-free. There is no risk associated with that. So if you are a person, if Mr. X is a person who doesn't want to take any risk, then he can go to bank. If Mr. X is not interested in any risk, he can directly go to bank and he can make the FD and he can earn the rate of 6 to 7%, and it is completely risk-free. With bank, you will never lose your money. It is completely confirmed. With bank, you will never lose your money, because there is always government sitting behind bank to safeguard your money, because they will never let that happen, that public is losing their faith in banking system. So it is never going to happen. That's why we can say with bank, your money is safe and it is risk-free investment. But I assume, for example, Mr. X is interested in earning more than what he is earning with FDs. For example, he wants to earn more than 7%. Then he can go to stock market. He can invest in gold. He can invest in mutual fund. He can invest in real estate, or he can invest in debt instrument. But definitely, guys, there will be some risk associated with every option. In other options, to whom we can call, they are not risk-free. They have risk. Then, in case Mr. X is interested in earning more than risk-free interest, then he needs to take some risk. And which option Mr. X will choose will depend upon the risk appetite Mr. X has. If Mr. X wants to take less risk, accordingly he will be choosing the option. He can invest in debt instrument. He can invest in mutual fund. In case vice versa is the case, Mr. X is interested in taking more risk, he can directly invest in stock market. Again, in stock market also, there are some stock which are high risk. There are some stock which are moderate level risk. There are some stock which have low risk. So accordingly, Mr. X needs to decide his portfolio depending upon his risk appetite. But guys, one thing I need to make sure for you, that why we need to make investment. Because it is really necessary for each and every individual to grow with the time. In case you are having good amount of money, still you need to invest it. Otherwise, by the time your money value will decline and you won't be able to cope up with the environment. As you know, Like for example, you all are educated people. You must be having different degrees. Someone's are graduates, someone's are masters, someone might be chartered accountant, some people might be company secretary, some people might be doctors. But do you know, whatsoever profession you have, still you need to brush up your skills. Still you need to learn new skills every day, so that you can just keep up yourself abreast with the new technologies and environment, so that you can have employment every time, on every day, throughout the year. Because in case you will not learn new skills, you will be outdated from the market, you will be losing your employment opportunities. On the same line, so that you can just keep your money intact by the time you need to invest your money. And for investment purposes, you must be having multiple options. In case you do not want to take risk, you can just invest your money with a bank. You can just make the normal fixed deposit. At least you will be earning risk-free return. And in case your risk appetite is high and you want to earn more return, then you can consider other option. And you can also take, in case you are not financially literate, you can also take the help of any financial advisor. He or she will be making a good portfolio for you, how to diversify your funds. Because it is a very common saying in the financial market, never keep your money in a single pool. It is very common advice, never keep your money in a single pool, never keep your all fruits in a single basket, always diversify. Because in case one investment goes wrong, there should be other to compensate. For example, if someone, Mr. X, has 1 lakh rupees in his pocket and he keeps the entire fund into stock market, and for God's sake, stock market goes down, what will happen? He might lose the principal completely. So it is always advised to diversify. Keep some fund in the stock market, keep some fund in the debt instrument, keep some funds in other sources of investment available to you, so that if one investment goes wrong, others should be able to compensate you. Coming back to slides, what does building wealth really mean? They are saying building wealth is not just about being rich. Building wealth, it is not just about being rich. It is about achieving financial freedom. It means creating a steady and growing stream of income, assets, and investment that your future and let you live life on your terms. In 2025, wealth building is about smart choices, digital tools, and understanding where the market is heading. Guys, they are differentiating between about being rich and achieving financial freedom. What they are saying, building wealth is not just about being rich. It is also about achieving financial freedom. Guys, can you help me to differentiate between two? What is the difference between being rich and achieving financial freedom? We have more than 90 people here. Can anyone help me in knowing the difference between two? What is the difference between being rich and getting the financial freedom? We have multiple people here. Zaheen, Leena, Ashna. Guys, please help
Sir,
me.
we can be rich,
Yeah.
like people having a lot of money, they are known as rich, but having financial freedom is what it's like we have money, but we know how to manage our money. Like money comes into our bank accounts and we know how to increase the money rather than just blatantly spending it.
Okay. Okay. Good points. Can anyone add on more? Naveen, Neeraj, Somdev, Swapnil, Zaheen, Ashna, Ritika, Karan. Please, guys, participate. I need your suggestions how you can differentiate between being rich and achieving financial freedom. Harshni, Amit, Radhika, Fatima, Kaveri. There are almost like 97 people, including me. People, please participate. We want to make it interactive. Guys, let me take you to an example. Just a moment. There is a person, Mr. A. He is a salaried person and he is earning, let's say, 10 lakh rupees per month. So we can say Annually, he has a package of 1.2 crores per annum. He is earning good amount of money, guys. He is earning good amount of money. 10 lakh rupees per month is not a small amount. So he has a package of more than 1 crores. What you will call him? Mr. A is a rich person or a financially liberal person? We can say he has got the financial freedom. Guys, please give me your suggestions on that.
He got the financial freedoms.
He has got the financial freedom.
So
Can
he is
anyone else tell
rich.
me?
He is rich, not
He is
financially.
rich.
He's not free financially.
He is not free financially. Why do you feel so?
So because he is salaried, at any point of time, his job can be like in danger, or he can be kicked out of his job, and then we really like you haven't told us about his like investment portfolio or his savings. So currently, by what you have said, that he has a salary of 1.2 CR, he can be kicked out at any moment, and he'll have no savings to survive.
Right. Though he is earning a very good amount of money, and as someone said, I have not given you another information about his financial portfolio, that how much he is investing, how he is doing investment in different areas, what are the other backups available to him. But if we just focus on the given information only, that he is drawing a package of 1.2 crores per annum, we can say he is completely dependent on that organization or on that job, that job is giving him that package. In case something wrong happen and that person loses the job, he is not having any another financial options as of now. But at the same time, if I just taken another example, there is Mr. B. He has an investment portfolio of rupees 5 crores, which gives him annual returns of 35 lakhs per annum. He has an investment portfolio of 5 crore, which gives him 35 lakhs income per annum. How you will make your comment on Mr. B? Guys, please.
If he's not working, then he is adequately financially, like he has financial freedom. Like if he doesn't have any other source of income, like if he's not doing any other job. But looking at this picture, he is earning without doing anything. So yeah.
Great. Guys, one thing that we need to keep in our mind, getting financial freedom is a very subjective thing. If I am earning 1 lakh rupees per month, if I am earning 1 lakh rupees per month, and it is my passive income, I am not doing any job, so it is not my active income, it is my passive income. For example, I am getting a rent. I have some real estate property and I am getting a rent 1 lakh rupees per month. And I just assume 1 lakh rupees is enough to bear all of my expenses, still that I have some money left with me. So I can say I am financially freedom. There might be some another person like Aditya. He is getting 1 lakh rupees per month, but his expenses are pretty more than me. For example, he needs to have at least 4 lakh rupees per month. So we can say he has not achieved the financial freedom yet. He needs to create more sources of income so that he can say, and when I say more sources of income, I am focusing on passive income, not active income. Guys, when we say financial freedom, you need to understand one thing. When we say financial freedom, they are talking about passive income. The income which you earn even when you are not working. When you're working and you are earning some money, that is your active income. And your active income cannot give you financial freedom because it is completely dependent on a particular source, and you will be getting that income till the time you are actively indulge in that source. But when we talk about passive income, that you have created a portfolio, you have created a source of earning, that even when you are not working, you are earning. Like there is a very common saying, make such investment, and create some sources of investment and earning. You are earning when you are sleeping. Even when you are sleeping, you are earning. So create sources of passive income, not active income. So guys, if any one of you wants to have the financially freedom life, what you need to do? You need to do investments and do your investment in such a way that they should fetch you a return which can completely cover up your expenses, which can completely gives you that money so that you can enjoy your life, covering up everything that you want in your life, and you do not need to work anymore. Then we can say you have achieved the financial freedom in your life. Again, it is a very subjective thing. 1 lakh rupees can give me financial freedom, but not to any other person. So it depends upon how you perceive the life. What are your goals? What is the amount of total expenditure that you need to do on annual basis or per annum, per month basis, as the case may be?
So can you repeat?
Any particular point? Like what? So Amdev, yeah.
No, sir.
Building wealth investment strategies for 2025. Guys, building wealth is not just about being rich, it is about achieving financial freedom. It means creating a steady and growing stream of income, assets, and investment that secure your future and let you live life on your terms. As they are saying, let you live life on your terms. In 2025, wealth building is about smart choices, digital tools, and understanding where the market is heading. It is not just earning, it is multiplying your money wisely. What are the options available, guys? You can do SIPs in mutual fund. SIP stands for systematic investment plan. Like every month, you are keeping some amount of money in mutual funds. There are financial managers sitting behind the mutual fund windows. They will be taking your funds, diversifying your portfolio. They will be balancing your risk. For example, if you are a person who wants to take low risk, so accordingly, they will be investing your money very wisely. They will be taking lesser amount of risk, keeping more of the money in debt, which will give you fixed amount of return, and keeping less amount of money in equity in the stock market, which can deviate, obviously, which can fluctuate. In some scenarios, it can give you more return. In some scenario, it can give you less return or might be loss. Example they have given, perfect for salaried individuals, people who are salaried, who are not the businessman. So people who are having certain amount of money, who are earning every month, have a salary income. So these are the people who have less time to do their self-analysis, how to invest money in the stock market. So they must go to, it is advisable that they should go to mutual fund managers, and accordingly they will be creating their portfolio and invest the money. For example, Axis Blue Chip. So there is no only one fund. It is just like Axis Blue Chip. There are ICICI Bank, HDFC, other banking sectors have also their all blue chip funds. Blue chip stands for the top 50 companies in case of Nifty and top 30 companies in case of Sensex. REIT, Real Estate Investment Trust. It gives you rental income without owning property. Example, Embassy Office Park REITs. Guys, have you heard about REIT earlier? REIT, REIT, Real Estate Investment Trust. Can anyone tell me what is REIT? Real Estate Investment Trust. What are these things, guys? They came into limelight around 2015 or 16 when people started hearing about these things. Government approved these kind of concepts. This was a time when real estate sector was on decline, extreme decline. DLF was faces huge financial crisis when government brought this concept, Real Estate Investment Trust. Can anyone tell me what is it? We have so many people here. Guys, can anyone tell me what is REIT? Yeah. Guys, what happened?
Hello.
It was a time 2015 to 16 when government brought this concept, REIT, Real Estate Investment Trust. Guys, what happened?
Hello.
Yeah,
Sir, I don't know clearly, but all I know is some people who don't want to invest completely in a real estate or a project, they can have a unit of it instead of buying the
right,
whole thing.
right. Very good. Guys, what happened? Let's say there is a real estate property and it has multiple people associated with that property. For example, this piece of property has a cost of 100 crores. Now, because during that time, 2015 or 16, real estate in the sector was really on decline, that there are really lack of finances in the market. People were not at all willing to invest in real estate sector. Property prices were really on the downside. We can say that before this period, if there is a property which has a market value of rupees 1 crore, so during that time, 2015-16, it was around half of the price, 50 lakhs. Government was really worried about, and people were not interested in investing more in real estate sector anymore. All the financiers gone out from the market. So in order to revive the real estate sector, government brought this concept. Again, for an example, there is a property, there is a land, or there is any complex, any shopping complex, any mall, which has a market value of 100 crore. So now people at large, public at large, are invited to invest in this property, which has a market value of 100 crore. You are not bounded to buy this property at a price of 100 crore. Even if you are having 1 crore rupees with you, you can become a investing partner in that property. And accordingly, in case, just like you, 100 people are interested to buy this property or to invest in this property, when public at large are invited to do investment in real estate sector, and there is a property which has a market value of 100 crore, and somehow 100 people gathered to invest in that property, so you can say you are having 1% stake in this property, which we generally call unit. You have not bought the complete property, but you are holding a unit in that property. And in case the property valuation is 100 crore and you are investing 1 crore, so you get 1% holding or share in that property. And after that, this property is given on rent. After that, this property is given on rent. And let's say the annual rent of this property is 1 crore. Let's say annual rent of this property is 1 crore, then you are also, you will must be having your 1% share in that rental income also. So it means we can say 1 lakh rupees rental income will be gone to you, because you have 1% share in that property. So accordingly, you have 1% share in the rental income receiving from that property. Why government brought this concept? So that real estate sector can be revived. There are lack of finances available in the market. It is really tough for the people to gather 100 crore rupees from one or two people. So it is generally invited public at large, so that they can have small holdings in that property, and so that at least we can make the real estate sector workable and it can revive again. Just like REIT, there are other informations available. Stock market via ETFs and small cases, diversified portfolio, theme-based investment made easy, electronic vehicle, small case. There are multiple things available on these platforms where you can make the diversified portfolio. Digital gold and sovereign gold bonds. These bonds are issued by governments and RBIs. It is not always necessary to invest money in hard gold, physical gold. You can just invest your money in soft gold, gold instruments. In case you go to RBI site and you go to government site, you must be finding these kind of bonds where you can invest your money. Safer gold investment with fixed interest, and buy through RBI or Paytm. Paytm also gives you the option to invest in demat gold, basically.
ആയിരത്തി 319
Golden rules for wealth creation. Diversify your portfolio. Never keep your money in a single basket. In case you invest all of your funds in a single basket, the risk that you're taking is extremely very high. In case your investment decision goes wrong, it can completely wipe out your money. So always diversify, make a mix of equity, debt, gold, and real estate. Start early, stay consistent. You can do the smallest amount of SIPs also, systematic investment plan. Invest little amount of money every month, every year in mutual funds, which we call SIP, systematic investment plans, and it really grow well by the time. Avoid high risk hype like cryptos and FNO, future and option trading can be tempting but risky. It can give you good temptation that it can fetch you good return, but at the same time it is highly risky. So if you want to have long-term wealth grow plan, then please avoid these things. Use fintech tools, apps like IndMoney, Kuvera, Grow, help you invest money smartly. They gives you very what we can say beneficial health, beneficial financial tips, how to invest money, where to invest money, how to track different funds. Career in finance. Why choose a career in finance, guys? They are saying finance is more than just numbers. It is the backbone of every business and economy. From investment banking to fintech, the field offer a dynamic career filled with growth, high salary, global opportunities. In such world powered by data and money, finance professionals are high demand across every industry. Guys, question is very simple question. Why to choose a finance as a career? There are other options too. When it comes to people who are from a commerce field, choosing a finance as a career is a very prominent thing that they can go for. Even for the other field people, doesn't matter in case you are from science background or arts background, still you can choose a finance. But yeah, commerce people are like, they are from the commerce background, they have already gone through these things. So it is very, what we can say, good option to pursue. There are multiple career options available in finance. You can work as a financial analyst, analyze market trends, company finances, work in banks, investment firms, or corporates. You can work as an investment banker, one of the highest paying job in the market. Can you name any most renowned investment banks in India who have their offices in India? Can anyone tell me what are the top investment banks in India? They might be multinationals, but they have their offices in India. Can anyone tell me? And doing a job of investment banking is one of the highest paying job. You can earn in crores.
So JP Morgan.
JP Morgan, right? Goldman Sachs.
Yes.
Lazard, Nomura, BNP Paribas, Morgan Stanley, Citi, Bank of America, Standard Chartered. Even Indian banks like ICICI, HDFC, they are also into investment banking segment. They are growing. Then we have a position called risk manager. Guys, when you have an in-depth knowledge of finance, you understand finance from scratch to advanced level. Guys, your career in finance will grow like anything. Because here skills matter. It is not something that your job will be easily replaceable by other guys. Guys, you know, when you're working in any company, one of the biggest fear is that you can be replaced anytime. If your job is easily replaceable, you are into a work which can be done by any XYZ. Mark my word, your job is always at risk. But in case your job is highly skilled, you are into a job, you are into a domain where your skills matter, where your analytical skills matter, and you are not easily replaceable. Even the management of your company will fear to lose you. You can quote any amount on the table what you want to earn, they will give you because you are highly valuable resource for them. But in case your job is easily replaceable, your work is easily replaceable, they will not think twice to replace you. In case you quote a higher amount, they will find someone else to do the same job at a lesser amount. So guys, always have one thing in your mind when you're making your career, when you're in the process of developing your career, do something which makes you unique. and how you can become a unique person when it comes to your career. Always work on your skills, always develop new skills, and your skills should be very much individual basis. Individual basis means when you are developing skills, you should be the one who can actually brush up them. Who can actually work on that. It should not be easy for any XYZ to work on that, because in case you engage yourself in those skills which can easily be learned, then obviously your job will be at risk. So always do something which makes you unique, which makes you very particular in that domain. And you can also go for professional degrees like chartered accountants, CPAs. Chartered accountants basically are the licensed accountants as by ICA, Institute of Chartered Accountants of India. They have auditing powers. They are very good people in finance. You can also go for CPAs. CPA is done by it is from US. Just like chartered accountancy in India, it is CPA in US. They are also the auditing people who have got the auditing power from US. They have also good knowledge of finance. You can also do the CFA, Chartered Financial Analyst. It is also from the US. These are the people who have hardcore knowledge of finance. When it comes to chartered accountant, they are all-rounder. They have a good knowledge of accountancy. They have a good knowledge of auditing. They have a good knowledge of finance. Same goes to CPA. They are the auditors. They know how to conduct the audit. They have a good knowledge of finance. But when it comes to CFA, Chartered Financial Analyst, they only do the finance. They have nothing to do with the accounting. They have nothing to do with the auditing. They know only finance. So if you want to go in something like professional degree who gives you specialization in finance only, then go for CFA. These are the professional degrees which gives you complete edge. For example, if you do certifications in financial modeling and valuations, certifications in investment banking, definitely it gives you good breakthrough in your career. But like if you are aiming high from the starting only, like you want to start with a degree, then definitely these degrees are really a good option. They will give you good start at the beginning only. You can choose the good companies in the start of your career. You can choose the big fours. You can choose the big multinationals available in your country. Skills and qualification you need, educational routes. BCom, MCom, these are the bachelor's and master in commerce, BBA finance, MBA finance, certifications, chartered financial analyst, chartered accountant, CFP, FRM, CPA. These are the certifications and professional degrees related to finance. Top skills, analytical thinking and Excel. Guys, Excel is something which is a backbone of the industry, especially for the people who are engaged in financing and auditing and accounting fields. Every single task is done on spreadsheet. And for spreadsheet, one of the important tools is Excel. So you need to have very good command over Excel. Your skills should be extremely of a very high level. Communication and decision making, understanding of market and regulations. Good communications are always in high demand. Guys, you know, your communication skills matter a lot. Even sometimes they surpass your knowledge. If there are two people, Mr. X and Mr. Y, Mr. X is highly knowledgeable, good education, and Mr. Y, he also has a knowledge, he also has a good education, but not at par with Mr. X. But Mr. Y is having very good communication skills. His articulation skills are really of a very good level, excellent in good communication. You know who will have an edge in his career? Mr. Y. Because when you have something good, you also need to know how to serve that. Just take an example of any restaurant. When you are having your food in a restaurant, there is a role of two people in that food. One is the chef who has cooked it, other is the waiter who has served it. Guys, please listen my point. When you go into a restaurant, you are having a good food on the table. Two people have played a significant role behind that food. One is the chef who has cooked it. Other is the waiter who has served it. You please tell me to whom you give a tip. In case you like the food, to whom you give a tip? Waiter or a chef? Guys,
Waiter.
Waiter.
who gets a tip? Waiter or a
Waiter.
chef?
Waiter.
Waiter. Why? Why waiter? Why not the chef? Chef is the person who has actually cooked it, but you are giving a tip to the waiter.
He served
Because,
us.
yeah. Please say.
He's
He
interactive.
serving.
One by one. Please say. Having good communication skills. Having good communication skills are just like good serving skills. And having good knowledge is just like how to cook a good food. Here, I am in the favor of both. You need to have good knowledge. At the same time, you need to have good communication skills so that you can serve your knowledge very well. You can convey your knowledge to the right people. You can articulate what you want to say to the people at large. In case you do not have good communication skills, just assume it is like you are having a good cooking skills, but you do not know how to serve that. And accordingly, you will be losing your tips. And if you really want to grow in your career, you need to have both good knowledge as well as good communication skills so that you can deliver well to the people. Tools to learn, like Tally, it is an accounting software. QuickBook, it is again an accounting software. Excel, you all know, it is very good for reporting purposes. Power BI, a dashboard. Nowadays, it is a very hot topic, Power BI. When you go into finance industry, Power BI is inevitable nowadays, guys. Any one of you wants to have a good career in finance, please add this skill in your resume. Power BI. It is a good dashboard, high in demand. Platform like NSC Academy, Coursera, Upgrade, these are the platforms which gives you a platform to learn. You can learn new courses. You can upgrade, what we can say, upgrade your knowledge, learn new skills, add more things in your CV. Udemy is also one of the platform which helps you. India's financial revolution, UPI, Aadhaar and DigiLocker. What is India's financial revolution? They are saying India's digital finance revolution has transformed the way people transact, identify, and access services. With platforms like UPI, Aadhaar, and DigiLocker, even rural citizens can now make online payments, verify their identity, and store important documents, all with just a smartphone. This shift has improved financial inclusion, speed, and transparency. Digital India is equal to empowered India. It is one of the dream of our Prime Minister Narendra Modi. Digital India is equal to empowered India. UPI transaction, this is one of the reference. UPI transaction crossed 14 billion in a single month, 2024 May. This happened. In a single month, crossed 14 billion transactions, UPI transactions. This shows the level of digitalization in a country like India, which was once considered to be a poorest country in the globe. This is the level of digitalization in India. Even in the rural city, people are using UPI platforms like Bheem, PhonePe, Google Pay, Paytm, etc. And it has completely automated the transaction system nowadays. In the previous webinar also, we were discussing how these all platforms like UPI, which is basically a technology, or platforms like Paytm, Bheem, UPI, or this PhonePe, Google Pay, has transformed the completely payment system. When we go into the market, if you are given two scenarios, if you're buying something and you need to pay for that transaction, it is more convenient that you just keep your phone out and do the UPI transaction and pay the money, rather than bringing a hard cash out and pay to that person. For example, you are buying a commodity which is of rupees 50, and you have two options. One is to bring your phone out and pay the 50 rupees to that person by scanning the scanner. Other option is just bring the money out, open your wallet, and in case you have 500 rupees note, then you will be paying that 500 rupees and wait for that person to give you 450 back. I still remember when this UPI technology came into the market, initially we people were not that much comfortable with that. We had many apprehensions into the market. It is about losing our money. It is about some fraud. It is about comfortability with that applications like Paytm and other associated platforms. But now people have become so much convenient that it is very difficult to bring the hard cash and pay the money. And it is more convenient that just open the app, whatsoever app that you have downloaded, scan the code and pay the money. No need to wait for that person to give your change back. And this is the level of digitalization. In the previous webinar also I discussed, during the G20 summit, many European countries and other Western countries, people came into India. They were just exploring the local markets in India and going to the juice vendors, vegetable vendors, fruit vendors. And they were surprised that it is not even happening in their own country, that even to pay for the vegetables and fruit, those guys were scanning the code and paying the money. They were completely astonished. This is the level of digitalization. India is completely changed now. I'm not talking about the rural, I'm not talking about the cities or urban cities. I'm talking about the villages in India. This has happened actually. And a great thing, which will take our company along into the path of growth. Game changers explained. UPI, of course, real-time money transfer 24/7, no time foundation, free, instant and widely accepted. Nowadays, no one doubt when you pay via UPI. Any vendor, even a vegetable vendor, he will not doubt on you when you are scanning the code and paying the money. This is the level of trust which has been developed. Apps, PhonePe, Google Pay, Paytms are widely accepted. Aadhaar, unique 12-digit identity, used for bank accounts, SIMs, government schemes, enabled direct benefit transfer. Guys, nowadays, whenever you are going to buy any SIM, you are going to open any account with a bank, you are going to apply for demat account, you are going to buy insurance, you are going to do any transaction where you need to get your identity identified, verified. The only and easily accepted document is Aadhaar. I agree. In Aadhaar also, I can say the authenticity is not extremely high. There are some risk factor associated with that too. But again, it is widely accepted document. It is completely trusted by all the authorities in India. And the only document which you have where no one can deny, you offer this document for your identity verification, no one can deny that document. There might be places that you go and you want your identity to get verified and you offer your voter ID. People may say, "Nahi, just please give me your Aadhaar card." So it is the level of reliability and acceptability of that document. DigiLocker, just to safeguard your documents. It is always risky to carry your documents without authentication. So nowadays, more and more people are getting aware about DigiLocker. They are downloading the apps. They are just safeguarding their documents in their smartphones, and wherever they require, they just open the app and provide the documents. Safety and easiness at the same time. It gives you easiness to provide your documents wherever they are needed, and at the same time, it ensures the safety. No one should have access to your documents without your permission. Secure cloud storage of official document, access PAN, driving license, mark sheet anytime, reduces paperwork and forgery. Impact and global recognition. India leads the world in digital payments. UPI is being adopted by countries like France, UAE, Singapore. They are still adopting. They're in the process. But in India, it is widely spread. Far-reaching approach we have opted. Aadhaar authentication used in over 1,000 crore verifications. Financial inclusion boost. Women and rural users now have direct access to banking. Even in the villages and rural areas, everyone is having access to bank. All people are having their bank accounts. This was one of the good initiative taken by present government, that they opened the bank account. They make it easy for each and every person, even in the last line of the country, to have the bank account, have access to the banking system. And it also reduces the level of corruption in India, because all the payment transfer are done through electronic platforms. Even small kirana stores now accept QR payments. We all informed about that. We all aware about that. Safe, fast, and transparent. Reduce black money and corruption. Obviously, when payment transfer are done electronically, so the involvement of black money, involvement of hard cash get reduced. Accordingly, reduces the corruption. Empowered citizens with digital tools. It makes you more empowered. Whenever you are going out, you have your smartphone. It gives you the level of confidence, even when you are not carrying hard cash. You have the competence that you can pay for your transaction. This is the level of confidence which have come into the people. Even when people are going out, they can forget the wallet, they can forget the hard cash, but in case they are carrying the smartphone in their pocket, they have that confidence that I can do the transaction, I can pay for my stuff. Finance role in entrepreneurship. Why finance is the backbone of business? Entrepreneurship is the journey of turning ideas into reality, and finance is the fuel that powers that journey. From idea validation to product launch and growth, every stage of entrepreneurship demands financial planning, whether it's raising capital, managing cash flow, or ensuring profitability. Finance helps entrepreneur make informed decisions, reduce risk, and drive growth. Without finance, even the best business idea may fail to survive. Guys, how many of you watch Shark Tank India? There are 99 people, including me. Please say yes,
Yes,
no.
sir. Yes, sir.
Okay.
Yes, sir.
Okay. So, guys, you all are watching those episodes. It's been there for a long time. People come there with their ideas, and there are sharks sitting who are successful people in their industry, have started with these small businesses, and now they have grown up. So basically, what we can say, it is an investment seeking platform, that there are guys who need money to grow their businesses, and there are people who have plenty of funds with them, and they are ready to invest if the idea is feasible, workable. Here is very important thing mentioned, that without finance, even the best business idea may fail to survive. Guys, do you agree?
Yes, sir.
Yes, sir.
Capital is more important than having a good idea. Guys, it has happened in past and many times that people who have good ideas, they go to different people. They go to private equity ventures. They go to different seminars attended by rich businessmen who are looking for good ideas. And it has happened many a times that people who have good amount of funds with them, they steal the idea of people who have good ideas but not the capital. So if you have good money with you, you can buy the idea. But if you don't have idea, but if you have idea but don't have capital, your idea may become useless. So combination of both is needed, but this is always superior. Having a capital is inevitable to have a business. There are people who can buy the idea anytime. There are people just joining the queue. There are long queues of people who have ideas, but people with capital are very less. So businesses cannot survive without capital. And the combination of both is always needed when we talk about the concept of entrepreneurship. Guys, on platforms like Shark Tank India, people come and you observe that most important discussion when the idea is good, first of all, what you observe, that people are just standing on that platform, they are demonstrating their ideas, they are showing their products, that this is the product that we have launched, this is our turnover, this is our EBITDA, this is our operating profit that we are earning, this is our annual sales, these are the our distribution channel if it is belongs to trading or manufacturing industry. But the most heated discussion, the most prominent discussion is about equity. Yes or no? Where you see that even the significant of idea get lost when it comes to having a discussion about equity. The people who have come up with their idea, how much equity they are looking, they are interested to forego in order to have the capital. Guys, you need to understand this concept. There is an idea which is successful, we believe. Now, question is about capital. When you go to any platform and you need more money, capital means money. This is very important discussion, guys. It is important for all of you. You need money, you need capital. And in order to raise capital, you have two options. One is equity, other is debt. One is equity, other is debt. Equity means giving other person ownership in your business. Equity means giving another person ownership in your business. And debt means taking a loan. When someone's become equity shareholder in your business, they get the ownership. And when someone gives you loan, it is completely a loan. The only burden with loan is that you will be paying annual interest to that person, which is compulsory, a burden on you, on your shoulder, on your business, that you need to pay annual interest in case you take the loan. So people who go to Shark Tank India, they are very hesitant in giving a equity. Like even the discussion sometimes goes about 2.5%, 5%, 7.5%. Guys, please understand, equity is really important because when you give the equity, you give the ownership. They have the controlling stake in your company, in your business. They will influence your business because they have this percentage of equity. And when someone have the equity, they have a share in profitability. Whatsoever profit that you will be earning in the end of financial year, they will be having this share. But in case of debt, you need to give fixed percentage of interest every year, but they have nothing to do with the ownership. They have nothing to do with the profit. Guys, I give you a situation. That you have a business. Your idea is at a starting stage that you have not made it highly profitable as of now. Your idea is not highly profitable nowadays. Now, as of now, the current picture is that your idea is not that profitable, but you still want to bet on your business, on your idea, and you need more capital to make it successful. I am saying, mark my words, your idea is not that successful as of now, but you still want to bet on your idea and you need more money to make it workable. Are you ready to give equity, or you will be more stick on debt only? You will be more rigid on debt only, that you will be taking debt, but not forego your equity easily. Please tell me your stand.
We'll go
I'll be
to
ready to
equity.
dissolve my equity.
One by one.
So dissolving equity would be the better option.
Dissolving equity would be the better option. Other people?
Better option, yeah. Same, sir.
Same.
Yeah, same.
So debt comes with like we have to repay the debt. So that comes with a time period within which we have to pay them back. But keeping in mind that we don't have money right now. So we'll be having a financial crunch. And on top of that, if our business fails, then we might become bankrupt. So dissolving equity would be a better option.
Okay. Swayam mentioned very beautiful points. One is debt comes with a burden of interest. When you are already suffering, your idea is not successful, you are lacking behind capital, then definitely, in case you go for a debt, it comes with a regular burden of interest payment. And in case you won't be able to pay your interest, it will take your business into biggest financial crisis. But in case of equity, definitely they will become the owner of your business. They will get the share in profitability. But in case of equity, you need to pay the dividend, and which is not mandatory. In case you are not earning good profit, you do not need to pay the dividends to your shareholder. You can continue to stay in the business. You are not paying the dividend, but you cannot continue without paying the interest that comes with a regular interest payment. So in case your idea is not that successful and you're hard in the need of finance and you need more money to make your idea successful, please go for equity. And in case to make your idea successful, even if you are for giving 20%, 30% equity, give that and make your idea successful. No harm in that. 2.5%, 5%, 7.5% discussion are not done in that case when your business idea is suffering with capital. Now, guys, I'll give you another situation. You have got a very good business idea. You have been operational for last 5 to 10 years or 8 years, as the case may be. You need more capital to expand your business, but already your business is operational. Your idea is very successful. You need capital to expand your business. It is not that you are suffering through financial crisis or cash crunch, but yes, you need capital. You need capital to make your idea more successful, expand your business into more areas, more regions. Will you be okay to forego your equity easily? Or will be
No,
rigid
sir.
on that part only? What will be your take?
So we'll be taking out debt on
Debt.
this part rather
Debt.
than dissolving equity, because the company is very successful and dissolving equity would be a very wrong decision.
Right. Guys, so I'm mentioning, and other people are also mentioning the rate point. When your business is successful, guys, these sharks will crave for your equity. Even the 2% matters to them. These sharks are not running behind ideas. They are running behind successful businesses. These are the successful people, guys. Do you think they need ideas from you? You tell me. Do you think they need ideas from you? No. They are themselves a successful people. They have a list of ideas. They have a team of people who can give them a lot of ideas. They are lacking behind time. They don't have time to invest themselves in each and every idea. They want to board on the vehicle which is already in the momentum. They want to board on the business which has already got the momentum. They want to drive on a car which has already got the momentum. Understand my point? These sharks are not looking for ideas. There are plenty of people who can give free ideas. Okay, even the computer system can give you idea. They are in the need of good successful business which are already operational, which have shown the result. And when these people come on that platform, they are craving even for 2 to 5% equity. And you must have observed, even the people who have come up with their ideas, they are negotiating for 2 to 5%. No, I will give you 2%. They are asking 5%. These kind of discussions are done on that platform. So please understand, when your business is successful, even 1% equity matter, because they want to drive the platform which is already successful. एक वो कहावत है ना, डूबती नैया पे कोई भी सवार नहीं होना चाहता. या एक और जो कहावत है, चढ़ते सूरज को सलाम. So everyone wants to get associated with people who are successful. So when your idea is not successful, you are in the need of finance, you are facing through cash crisis, take equity. Forgo your equity, doesn't matter. It will not give you financial burden, regular financial burden. Forgo your equity. At least you will get some funds. And there could be some chances that your idea can become successful in future. If you are ready to bet on your idea, you feel that this idea can be successful in your future. There is only a need of finance. But when you know your business is successful, you're already earning profit, do not give your equity easily. Fight for it. Even fight for the 1%. Take good amount even for giving 1% equity. That shows the valuation of your business. Key financial functions in a startup: capital planning and fundraising, determining how much capital is needed and from where. Guys, in financial sector, 3 decisions are really important. We call them 3 financing decisions. One is investment decision, where to invest. Second is financing decision, how to raise finance for that business. For example, you want to invest in automobile industry. You want to manufacture accessories related to auto. And you just estimate that there needs a capital of rupees 10 crore. So one is what to do. You want to invest in automobile industry. Second is from where to get that finance, from where to arrange the 10 crore rupees. And third is dividend decision. After doing your business, you are earning profit, then what to do with that profit? How much to retain in the business for future expenses and how much to give to the shareholder, to the people who have invested in your business. So 3 decisions are really important to learn. What to do, that is where to invest. Second is from where to arrange the money. And third is what to do with the profit. So determining how much capital is needed and from where, self-fund loan investors, understanding debt versus equity, budgeting and forecasting, creating financial roadmaps to plan revenue, expenses, and break-even point. Break-even points are really important, guys. Break-even point क्या होते हैं? Basically, no profit, no loss situation. Any new business, really look for a break-even point. They want to attain that level, at least they have stopped making losses. Initially, businesses are loss-making. Zomato was loss-making, Ola was loss-making, Swiggy was loss-making, Uber was loss-making. Initially, new business ideas are loss-making. But any new business is just starving to achieve the break-even point. They are starving to achieve the break-even point. It means they want to attain a situation where they have stopped suffering losses anymore. It means their profits are sufficient to cover all the expenses. Forget about more profit, but at least they want to earn that level of profit. It is complete enough, it is sufficient enough to cover all the expenses and cost. Cash flow management, tracking incoming versus outgoing funds to avoid liquidity issues. Liquidity really important. You want to maintain net working capital for your day-to-day expenses. Cost control, reducing unnecessary expenses to maintain profitability. Cost control is really important thing to work upon. You need to avoid unnecessary costs. Financial reporting and compliances. After all, you need to report your financial statements and follow the compliances. Compliances means follow the laws made by regulatory authorities and government. Ultimately, it is a part of reporting. Guys, financing option for entrepreneurs. Please have a reading. Guys, nowadays, people are looking to be an entrepreneur. There is a shift in the people mindset. Of course, depending upon job is always an easy option. Getting into entrepreneurship is not that easy. But yes, people have started taking it seriously. That if you want to gain financial freedom, being an entrepreneur is always a choice. So it is not always easy for everyone to have access to big amount of funds. Capital is not freely available in the market. It is very difficult to have that. So bootstrapping is always a choice where people just try to survive, just try to start businesses with their own funds only. Even they have little funds, but they just try to work on the basis of that little capital only. Using your own savings, good for early stage startups with low capital needs. Bootstrapping, you can say In Hindi, we can call it Atmanirbharta. Whatsoever you have, try to work upon with that only. Angel investor, venture capitalist, fund innovative, high growth ideas in exchange for equity. Like platforms like Shark Tank India and other private equity platforms, where you can just go to people, show your ideas and ask for capital. And even if you want to, you need to give to more equity, please ready to give. At least you need to make your idea workable. You have the only that option available. You cannot negotiate for equity. Bank loans and government, not a very good option, but yes, government provides many schemes for new startups and SMEs, small and medium scale industries. You can consider those schemes and subsidized programs. Schemes like Mudra loan for small businesses, very small businesses. Startup India provide capital at low interest. Crowdfunding, raise small amount of money, people via platforms like Keto and Kickstarter. There are many platforms available on the web where you can do crowdfundings. Like you can invite little amount of money from public at large so that you can have good amount of money to start your businesses. So in that case, there will be lots of shareholder of your company. But yes, at least you will be able to have a business in place. Yeah. Someone asking something? Okay. So guys, these are the financing option for entrepreneur. It is always good to start, guys. Always good to start. Doesn't matter you have less capital, but always take an initiative. One day it can become big thing. So never hesitate in starting your own. Mark my words, never hesitate in starting your own. It can take time, but one day you will feel proud of you that you started something by your own. Why financial knowledge makes a strong entrepreneur? Better decision making, understand cost, benefit, profit margins and funding impacts, risk management, identify financial risk early and plan mitigations, how to mitigate the risk, how to reduce the risk, scalability planning, know when and how to expand without overextending. There is a right time to extend. When to extend is a good decision, big decision. Investor confidence. Investors trust founders who understand their numbers. Again, good example, Shark Tank India. People will be willing to invest in your business when you are completely informed about your business. Where do you actually stand? When you go to Shark Tank India, you must observe the discussion related to turnover, discussion related to valuation, discussion related to annual businesses, EBITDA, EBIT, EBT. These are the terms used because they tell you about the practical position of your business. Where do you stand? It is not that you can just blindly ask for the capital. This is the fund, this is the capital I need. Yeah, you need to tell them where do you stand, how much capital infusion you needed, and how it will grow into your business. They want to track their money, how it will work on your business. So you need to have complete idea about your numbers. Guys, so this way we end up today's session. It was really a beautiful discussion with all of you.